Look, I'm confused here when you look at the stock market because 2 years ago, even a year ago, it was pretty easy. You looked at the bond market, and if yields went up, the stock market went down, and vice versa. Then we're talking about margins. Then we're talking about efficiency for the tech stocks. What is leading the stock market today? What's driving it?
I think there's a couple of different factors. I think one is that when you look at earnings, they've still been, fairly robust. Certainly, we're off the highs that, we saw in the post-pandemic period, and we had earnings decline slightly over the last 2 quarters. But still, earnings are quite robust, and the guidance that from companies at least is still, suggesting that there's decent, strong demand ahead, albeit waning. I also think, though, by and large, equities outside of, big disruptions to the market tend to, move up. And so we've seen just this sort of grind higher as the market's really waiting for recession, which looks to be on the sort of knocking on the doorsteps of investors, but hasn't yet hit. And so I think, sort of in the absence of bad news, equities have sort of grinded higher. I think the risk, though, is that there's very little priced in, and there's a lot of complacency when you look at equities regarding the outlook ahead. The bond market is telling you that there are risks that are starting to percolate, that you are starting to see an economic slowdown. Inflation's falling, but it's still going to remain high. And equities, on the other hand, are really, sort of operating in absence of any risks on the horizon. And I think that disconnect between stocks and bonds right now is telling you a story that, equities, you really should be a little bit more cautious about equities as we move into the second half of this year.